All right, good evening. It is Sunday, the 1st of May, and this is the Sage Analysis Members Weekend video. So I'm going to start tonight with a run through of what's been going on in major indexes before getting on to the major members content, which will be we're looking through some of the large cap stocks and their stage analysis of those, then sector RS, industry groups, market breadth, before finishing off with what's going on in terms of earnings this week for some of the stocks reporting and what's the most interesting on both the short and long side in those. So as I said, starting off tonight with the major indexes. So the S&P 500 reached a pivotal point this week, so with a potential stage 4 breakdown attempt on Friday there. So we did have a bounce midweek after coming off on Wednesday, like putting in a slightly lower low and then rebounding on Thursday. But it didn't make much progress, and all of the indexes quickly reversed again on Friday and then attempted to make stage 4 breakdowns. We've got the S&P 500, NYSE, I think the Dow, the Nasdaq, they're all looking potentially in stage 4 currently. So although we haven't totally broken below that February the 24th low in the S&P 500 here, it was the lowest close that we've seen. If I quickly go to a weekly chart on this, you can see on the weekly chart the large head and shoulders pattern that we've been forming for a long time now. So lowest close, potentially, obviously distributional top here, moving into stage 4. So here we go back to the actual individual charts here. So it could still rebound here. We could still spring. We could still push back up for a further last point of supply. But there was a lot of individual stocks that were previously strong, obviously, that started to break down on Friday. So that's a bit of a warning sign going on there. You can see the percentage of stocks above there in the S&P 500 above their 20-day moving average closed at only 11.6% there. So very, very low. So we're in a point where it could potentially turn back around again. But as we saw with Thursday's move back through the 30% level, it was quickly rejected. So the next point on this now would be a break back above the pivot highs here. So if that can move back above through that level there, then potentially would give a short-term signal on that one. Nasdaq, very similar, closed lower lows again. We continue to make lower lows. We're into early stage 4 in the Nasdaq Composite as well. You see we've remained under this major level of supply, and we're still a long way below that 200-day moving average here. So it's now 18% move to get back up to the 200-day moving average, which is a long way for, in terms of individual stocks. Tends to be with the growth stocks there. They tend to be 1 or 2 times what we would see in the actual index itself. So some of those might have 30+% moves to get back to their own 200-day moving averages with that in mind. If we look at the Russell 2000, similar type of move, closed Friday, not quite at a lower low. It made a lower low on Thursday and rebounded back up again, but lowest close that we've seen in this one continues to be in stage 4 after breaking down early in the year. It was one of the earliest to break down. So we look at the weekly structure on this, as I've shown many times on the weekend videos. We've been in that major stage 3 structure. We had a last up thrust after distribution, last point of supply. We've made a further lower high here with another last point of supply and started to break down. So you can see we've broken the recent lows more convincingly in the Russell 2000. So January 24th and the February 24th lows that we had, and this is now making a lower low, and we're into a stage 4 continuation breakdown. We look at the weekly charts of all of the bigger major indexes. So the S&P 500, as I showed just a minute ago, lower low here, closing down in early stage 4. We've got the NYSE with this really large stage 3 top that it's been in for a good part of the last year and a half now. Again, lower low, still hasn't quite broken the recent lows, but sitting right on them. So we could still get a reversal pivot in this, and it could potentially hold up the market if it does. See, the NYSE is where the stronger stocks have been of late, the energy groups, materials, etc. So, but a lot of those, as we'll see in the sector and industry group RS tables in a bit, have started to come off in the last few weeks. We've seen some distribution, which you can see obviously in the NYSE chart here, 2 weeks of heavy selling big price bars on increasing volume here. So the volume has been rising while we've been selling. So not looking overly positive there. So potential move into stage 4 in the NYSE. Nasdaq already into stage 4, breaking down a little bit more convincingly on Friday. So we're moving further into stage 4 on the Nasdaq. Yeah, come out. Nasdaq 100, same sort of thing, early stage 4 on that. The Dow, I don't normally look at the Dow Industrials, but this tends to hold up, one of the longest of the major indexes. Obviously, the larger blue chip type stocks. So this has come off the last 2 weeks. Again, big head and shoulders type pattern in this. Hasn't yet made a lower low, but potentially moving into early stage 4 on this as well. As is the small caps. As we already saw, the Russell 2000 small caps has already been in stage 4. So see the S&P 600 small caps have held up better than the broader Russell 2000, as you can see, but relative strength wise, the larger of the small caps have done better. But overall, the strongest index has been the Amex, which continues on in late stage 2. Actually made a reversal around its 10-week moving average. So this continues on in stage 2, while the rest of the market is now potentially in either late stage 3 or early stage 4. If we look at the IBD 50, so this is the Can Slim index. This has been in stage 4 since early in the year. So it broke down majorly into stage 4 at this level in mid-January here. Could potentially have taken the earlier breakdowns in here as a stage 4 area as it was breaking a pivot. If we look at on the daily chart up here, so he started to break down below this kind of level in this area, but not until actual mid-January did it break down convincingly. So this is when you would potentially have called it as stage 4, as it was still had multiple levels of resistance and support in this area here. So not until actually had that clean break, we made another one that's making a stage 4 continuation breakdown. So not looking too good for the growth stocks either. And then finally in the major indexes here, the ARKK, obviously lots of people have been talking about this one for a while now, and it continues to make lower lows in stage 4. Another continuation breakdown to new lows, and it's now reversed this entire stage 2 move. So since breaking out into stage 2, you can see we're actually well below the original stage 2 move. So that was your bulk of the stage 2 move before we got the change of behavior that then started to move it off into stage 3. But we're now below that level, so completely destroyed the original stage 2 advance, which everybody was so happy about at the time. This is a classic kind of pattern in stage analysis where oftentimes the strongest can tend to give back the entire move again. So that is something that goes on and on again. So with this one, you'd be looking for ARK to start to base and start to form up, but with such a deep stage 4 decline now, it could take a long time for this to eventually move back into stage 2 again. So that one's definitely off the radar for a long time as yet. The VIX moving off towards higher highs again, so we still remain a long way above this 200-day moving average, continuing to be in a high volatile area above the 30 level at the moment. You can see obviously works inversely to what the S&P 500 at the bottom here is doing. So while this remains above its own 200-day moving average, this is a difficult environment on the long side. If we look at some of the major stocks that reported earnings in the last week, so we had a bunch of mega caps reporting over the last week. I talked about in the midweek video a few of them and what was coming up, and we had Apple this week, we had Microsoft, Google, Amazon. I don't think Tesla reported this week, but it was basically some of the big stocks reported, and most had a negative reaction. So Apple, although it remains in the stage 3 range here, it rolled over after bouncing at moving up into its 50-day moving average here. So you can see the move up into the 50-day moving average was quickly rejected on Friday, and it's come back down and closed back below that 200-day moving average. So not looking overly positive for Apple, although it remains in stage 3. But if it does break below near-term levels in here, if it starts to break these near-term pivots this week with a strong move to the downside here, and especially on stronger volume, then that would obviously knock it off into stage 4, as this 30-week moving average would then start to roll over as well at the same time. Got Microsoft again teetering on the edge in stage 3. The 30-week moving average has started to decline and flatten out again. It did have a move back up into its 10-week moving average there again. So if we look at this on the daily chart, you can see it gapped up, had a positive reaction initially up into its short-term moving averages, but squatted and then reversed back down again on Friday and closed underneath into the gap. So potentially this one could break down into stage 4 as well. See, that's the bottom of the stage 4 range at the moment currently. If we look at it back on the weekly chart again, if this starts to reverse down into here, then again that would move off into stage 4. If it can hold and we get another spring attempt, then we'll be looking for it to start to move back above that 30-week moving average and start to move back up and out. But in the short term, with the way the market is, obviously stage 4 appears to be the more logical, the path to least resistance at the moment in most. Amazon made a stage 4 continuation breakdown. It was a really heavy breakdown another 10 to 12% in the overnight session after earnings. It had this big bear flag type pattern that formed after its spring attempt. So it tried to hold up after breaking down into stage 4, and it's been grinding slightly higher back into its 30-week moving average. But you can see the failure at the 30-week moving average for 3 weeks in a row there before making a lower high here and then rolling down on earnings and breaking below this pivot. So this one's off to stage 4 continuation. Tesla, another one that's in stage 3 at the moment. It's been holding up much better, but there was obviously some large players selling. I think Elon Musk sold shares this week, which saw it tank on one of the days by more than 10% later in the week. So potentially in a stage 3 range at the moment. Still, it could obviously go either way at this point, but if we look at it on the daily chart here, you can see it's now below that 200-day moving average again. Although it reversed back up and into its 50-day, it then reversed back down again and closed back below the 200-day for the week. So this was that day of selling we saw a heavy day for Tesla. We haven't had many days like that since, I think, the significant reversal bar back down. Back here was the other largest bar that we'd had similar to that, this other bar down here. So potential for a reaction after those. But you would expect with the heavy supply in these kind of bars that it wouldn't get much back up past the middle of the bar. So it's already had the first attempt into that at the 50-day moving average here, which is around the middle of the bar there, and then reverse back down. So if this starts to break to the downside here, then that would potentially send this one off into stage 4 as well. So, but there is some support at the bottom of the range from February of March, which is still above at the moment. We're still 24% above the low there, so it's still room for Tesla to hold on in stage 3. But if the rest of the market continues on into stage 4, then it tends to be everything goes to a correlation of 1, and you tend to get a move across the board as people panic sell. So at the moment, showing some better relative strength than most though. Nvidia, another one that started to break down, did have a smaller week with only a minus 5% move, but still moving off into stage 4 in the last few weeks now. You see the 30-week moving average has just started to roll over now. It had been holding up. But again, if we look at it on the daily chart here, you can see the pivot low below the 200-day moving average there that had marked off the range. Up thrust here. And last point of supply started to move off down. So we've got a major sign of weakness here as it started to break down into stage 4 here. It hasn't managed to rally back up at the end of the week. We had that strong day in the market, but you can see the rally didn't really make much progress, didn't get back up towards the prior resistance and reverse back down again. So this one could potentially continue on in stage 4, although there's obviously a big area of support in this range here. So it could come down to the 120 to 140 level there. find support in this kind of range, so 20 to 30% below in that one. Right, and then finally of the mega caps, Google. So again, broke down into stage 4 last week, highlighted it multiple times, and on the individual posts, on the evening posts, and on the feeds. So this one came off again on earnings and just continued on down. So again, not too much on the week, only 4 or 5% off on the week, but clearly into stage 4 now with a break below the 24th of January low there. So significant breakdown level. And it hadn't, again, the rally moved back up on Thursday, didn't make much progress, little gap fill, and then reversed back down again. So earnings, I think this was the earnings day on Wednesday, and moves back up again and then off down again. So if we can, it could potentially start to form a sideways range in here, similar to what we saw in Amazon. You could get this kind of behavior. Often happens after a stage 4 breakdown. You don't, a lot of the time with a stage 4 breakdown, you don't get huge progress initially, but with the overall market breaking down, then potentially we could also be on for a flush. And there's not a huge amount of support until back into these kind of areas down here. So you could see a move back down towards this 2000 area here, which was a last kind of area of support resistance before obviously this level down here. So Google also looking weak and now in stage 4. So multiple major stocks now moving off into early stage 4 as well as late stage 3. So not looking good with the generals now finally starting to succumb to the stage 4 behavior that we've seen in the market for many months now. So again, if we go back to some of the prior charts here with ARK there, for example, breaking down in November time there, you've got the IBD 50 stocks breaking down in December, January time, whereas the small caps broke down in early January. So whereas the S&P 500, Nasdaq, etc. have held up longer. So with the generals now starting to break down, potential for obviously a more extreme move in stage 4 is obviously now extremely elevated. So it's a very, very dangerous situation at this point in the market, as very little is holding up the market. So we could see that quick kind of capitulation type move that you often see. We saw back in late 2018 at the end of the move. Obviously the COVID lows was a quick type of flush move, but this kind of the stage 4 that we've had over the last year has been much more drawn out, with the under the surface breakdown in the growth stocks beginning it, and then the leading stocks starting to break down later in the year around the October-November time, before we started to see more start to break down, more of the normal stocks, the S&P 500 stocks, etc., starting to break down early into the start of 2022. So gradual process, termites, as Stan Weinstein would say, just nibbling underneath the surface and gradually breaking the market down. But we're now at that pivotal point where there's very, very little keeping this from making that major stage 4 breakdown move, which obviously would then make some, obviously the big kind of headlines that you see. But the buy the dip crowd has still been fairly strong until this point. We've had multiple little dip attempt buys, but we're starting to see some of these bigger stocks now starting to capitulate a little bit.